Hi, everyone. It's Tony Sirianni with another Industry and Transition Zoom call. And we're lucky to have Brad McMillan, who is the Chief Investment Officer at Commonwealth. Thanks for being here, Brad.
Great to be here. Thank you so much for having me.
Well, it's a great time to have you, I guess. Not a great time for the markets. I guess we shouldn't bury the lead. You know, it's hit the fan a little bit in the last couple of days, and we're officially now in a bear market. I'm wondering, what are you hearing? What are your thoughts on? I mean, I know you're in constant touch with the field, but let's just talk about the macro piece of it, first, the bear market.
Well, first of all, I would say, yeah, we are in a bear market, but I would add we're back in a bear market. I mean, we've been bouncing in and out. It's been a tough couple of months. And, when you look at that, on the one hand, of course, it's scary. Of course, it's something we need to pay attention to, and especially something we need to talk to our clients about.
Right.
And that's actually most of what I've been doing is, putting out pieces for advisors to share with their clients, talking with advisors about what's going on and how to deal with it. Internally with our portfolio management, we've been saying, how do we handle this? What do we do? But at the end of the day, this is something that is normal for markets. I mean, we normally get a bear market every 5 years or so. If you drop it down to like a 15% decline, we get that every 2 or 3 years. Right. So it's important to pay attention, but it's also important not to overreact. I think that's one of the values that we as advisors, and especially for what I do, the investment people, is to help the advisors help their clients not to overreact. So that's our main focus right now.
Yeah, it's interesting because we've seen this before, right? We know how this goes, and I think it's funny with clients because as clients age, in the beginning, I think they're willing to say, "Oh, I've seen this," but all of a sudden, you're 65 and this hits now. There's timing and there's timing, right? So it's never a great time for one of these things, but as you get older, it's harder.
And that's certainly true. And as the population as a whole are getting older, as advisors are getting older, as you and I are getting older, I mean, this is no longer theoretical for me. You're younger, but I understand what people are saying, but again, that's why it's important to have some perspective. And that's, as an advisor, this, quite frankly, is where we add quite a bit of value. I mean, I have clients of my own, and I'm getting these conversations and we're talking about it. And, this is where we can add value. When everything's going well, they don't need us. When everything's
you earn your money. This is the time to earn your money. You earn your pay and the commissions, now. And of course, all the studies, I assume you've seen them when people stay in, they do better. When they pull out and then they try to go back in, it's always a disaster. You're always buying at a much higher rate, they need to. And that is, one of the things that anchors financial advisors sort of in the investment communities. They try to keep everybody involved. If you've made this investment choice, let's stick with it for the long term, right?
And that's the thing. I mean, ultimately, you're not betting on the stock market. You're betting on the U.S. economy because the market will grow with the economy and the economy will grow. So, what I've been telling my clients is if you're younger, then this is great. You get to buy things on sale. If you're older, then this is great for your cash purchases, for everything that's in there. You can actually get a decent rate of return on a risk-free basis, and your forward returns are going to be better. I don't want to minimize it, but it's not all bad when you start to dig in the details.
Right. I think that's kind of reflected in some of the products and some of the things that you see, and some, I think, the way firms are approaching this. Look, firms are still recruiting, right? They're still growing. I mean, it's not business exactly as usual, but it's, like you said, it is usual, right? This is the kind of thing that happens.
Anyone who's been in this business for more than the past, well, in this case, 3 years, because remember 2020, has been through this. And anybody who's been in the business and really understands the value we add to clients knows that we have to be smart about this. They can be emotional. We have to be smart. And that's my job, to help our
I think there were, look, as of 3 years ago, we had a bull market for 10 years or whatever. That was some crazy number. And I think the emperor had no clothes 3 years ago. So advisors who were just riding this thing and making, poor decisions, a lot of them got, washed out, but the good guys, kind of stayed. I guess in terms of Commonwealth, I think you're a little bit more I'm gonna put some words in your mouth, but because you and I have talked a couple of times, and I think you're a little bit more of a proactive CIO than other advisors might be used to. Not only proactive, but sort of client centric, advisor centric. Talk a little bit about your day when something like this happens. I'm just curious to know, your interactions with the field. How does that work on a bear market day?
Well, for example, I've gotten, as you might imagine, any number of emails asking me what's going on. In fact, that's what I'm doing after I'm done here. I'm going back to answer emails. I've also gotten a bunch of phone calls, because one of the things that I tell people when they come in or when I'm talking to them is, look, call me. I pick up my own phone. And what usually happens is somebody will call and I'll pick up the phone. I'll say, hello, Brad McMillan. There's a long pause. Oh, I didn't think I'd get you. Yeah, you got me. And that's kind of how I view the job. I mean, it's not that I'm not involved with the portfolio construction. It's not that I'm not involved with the product selection. Right. But my real job here is to make sure that everything works together. And my real job here is to make sure that it works for the advisors. And a critical part of that is to make sure the advisors get the help they need, not just from me, but from anybody on my team whenever they need it. So not all research people, not all investment people are really social people. You might have noticed that.
Yes, I have noticed that over time. Yes, I've seen that.
Anybody who comes here has to not only be willing to, but actually enjoy talking to advisors, because a big part of our process is communication. We've been very, very successful in the investment stuff itself. It's because we will tell you what we're doing. We will tell you why we're doing it. And my view is the external facing is just as important, maybe more so, as the internal. So
it's a matter of setting expectations. It's managing expectations, right? And expectations versus reality. That's the job. And that's sort of you're on the same side of the table as the advisor when you're doing that.
We're all on the same side of the table. We're all, the client, the advisor, us, we're all trying to get the best outcome for the client. And because that's going to be over time, the best outcome for the advisor. And if you think about it like that, not everybody does, but if you think about it like that, it actually makes it very easy. I mean, at Commonwealth, we're all about community. And you might say, well, what does that mean for an investment person? For me, what it means is this is basically a helping profession. We're helping people meet their goals. Right. And everything we do to that. So we're going to do the investment stuff. Absolutely. We're also going to help the advisors with the clients. I will talk with clients on occasion if an advisor wants me to, just to help talk them off the ledge. Yeah. I prepare things pretty much every day to go out, especially in times like these. And a lot of the time I structure it based on what the advisors are asking me for. If I get one call or an email from an advisor asking a question, I might write it up. If I get 2 or 3, that's 200 or 300 people who haven't tried to write. Right. And,
I guess so. So that's the macro idea, which I think people would find refreshing. If you're one of the things that, if you're an RIA out there alone, you feel out there alone. You have access today. When I started, we had pink sheets, right? This is like Merrill. We had Merrill Lynch research. We had this, we had that. It was, a very small world of, and it was hard to get access. And you sometimes advisors change firms to get good, research. Today, it's everywhere. So in my mind, the service model of having research that's responsive and do I want to say that it's a world where, people have different opinions, but things come to a mean even in research, right? So at some point, it's service delivery model that matters. Because if you're an RIA on your own, you got the internet, but how helpful is that?
And that's I think is a really good way to put it, Tony. I kind of think the same thing, but put a little bit differently. So tell me what you think of this. There's a difference between data and information. There's a difference between intelligence and wisdom. And the data and the intelligence is out there. I can get you a ton of data. I can get you a ton of intelligent analysis of that data. But what does it mean in the context of your clients and their lives? Right. And that's what I see my job as being, to put it in that broader context. Okay, the market is down. What does that mean? Well, the market is down. And I can give you 50 people who say it's coming back, and I can give you 50 people who say it's not coming back. Well, okay, what does that mean for your clients? Well, let's look at their expectations. Let's look at their goals. And let's come up with a narrative that incorporates all of the facts, all the intelligence, but is wise enough to help you help them.
Right. And yeah, look, that's the value of a firm. That's why you should be in a firm, and that firms ought to have, a research component that sort of helps their advisors, put all that, together. Look, I've done it on my own too. It's you feel good. Oh, I put together all this information, but you're right. Information without, trying to figure out what it all means, or at least having perspective on it. And that's a full-time job. That, to do that and to manage and source clients and everything is you're asking quite a lot from somebody, it's like too much.
And I think the way you phrased it is exactly right. Yes, you can do it, but is this the best use of your time? Right. Maybe it is, maybe it isn't. I know advisors that is absolutely the best use of their time because that's how they run the program. Yeah. But the other question is, I have 25 people working for me. I have 20 plus years of experience. I don't want to say actually how much, because that gets into the old thing, but I have a lot of experience, and I have a lot of people with a lot of experience. I don't care how good you are. Are you as good as an entire team? Right. I know I'm not. That's why I focus on what I do, because frankly, I got smarter people who know more than I do about their components. Yeah. And you get all of that along with absolute accessibility. And that's how we built this company. That's how I built this department. That's why we win all the awards we do. And
so now let's shift gears a little bit. I do want to just get a quick, and we could do this at the end, maybe like a teaser for people, but just a quick view on inflation, kind of where you think that's, headed. I know that's the question you get all the time. But how do you, we just talked about a good way to use it. How does it come up in recruiting? Do you, because look, our advisors are always wondering about, firms and how they're growing and how they're building it. Are you part of the recruiting process typically at Commonwealth, or do they talk about the research and the help that you guys can give advisors?
Absolutely they do. Absolutely they do. Because, the way I see it, and I admit I'm a little bit biased here, the way I see it, we're a competitive advantage. Back when Financial Advisor magazine was awarding the research awards, we won every single year because our advisors took the trouble to write in and say, these guys are great. That's what matters to me, that we're servicing our advisors. The awards are great, and then you look at, when you look at the responses for the J.D. Power Awards, again, research comes up. And when they're talking to people, it depends on who they want to talk to. Sometimes it's me, sometimes it's one of my colleagues. Right. And that's great, because this is something that adds value. This is something that saves time. And there's so many ways we can help. And it's important to talk to them to find out what those are.
Yeah. We don't have a ton of time left, like another 4 or 5 minutes here. So I do want to hit on, inflation and kind of, and then we have, also, taxes now and things like that, coming up. So, and an election. So there's a lot going on. And we have our conference. Are you at our conference in November? I'm not sure if it's you that's doing it or not. It would be great if you came out there, but that's going to be right after the election cycle. So I'm kind of curious, where you see things in the short term. I know we're long-term investors, but what are you seeing out there? Yeah.
Well, in the short term for the market, I think we're going to see continued pressure. What's really driving the market down is a combination of fears about earnings and fears about interest rates. And both of those fears are well-founded, and we don't know how bad it's going to get. So short term, I think we've got continued pressure. I think that probably lasts until next year sometime. After that, I think we're going to have purged a lot of the excess from the system. I think you're going to see markets actually take a rebound, and potentially a significant one. But there's no doubt about it in my mind. Certainly, short term is going to be tough. And that's okay, because this is something that needs to happen.
Right. Earnings drive markets. That's about the only lesson that I remember from my early days as an advisor that seems to have held, true straight through. Earnings drive stock prices, earnings drives markets, and where we are. And in inflation, it seems like they've got to continue to do that. As you had mentioned, there's opportunity in inflation too.
Absolutely. You look at some companies out there, they can actually take advantage of inflation. When you see not inflation itself, but higher interest rates, you can now get a risk-free return of between 4 and 5%. Wow. We would have killed for that a year ago, 2 years ago. So from a saver's perspective, and again, I'm not minimizing the damage that's been done, but from a saver's perspective, this is looking something that's not only a lot more normal than what we've had, but also a lot healthier going forward. So when we start to heal, when we get through the worst part of this, we're actually going to be in a better place for investors and for the economy as a whole than we were coming into it.
Yeah. Well, look, I appreciate the long-term perspective here and talking about the recruiting. Is there anything that I didn't ask that you wanted to talk about before we, because we're, believe it or not, we're at that time?
I'll just say 2 words about time frame, because one of the things that I find clients get caught up on, and even sometimes advisors, is what's the right time frame to look at things. And that's a key part of what we do, to point out that over the past 5 years, you've done great. Over the next 5 years, you're going to do great. Yeah, it's been a tough couple of quarters, but it's not about a couple of quarters. And just as with investments, I think as a firm at Commonwealth, we're actually recruiting and we're bringing people in with the expectation they're going to be with us, they're going to want to be with us forever. And we build everything on that basis. We don't just want you to be happy today. We want you to be happy 10, 20, 30 years from now. And that's how I run my part of the business. And I wouldn't do it any other way.
Fantastic stuff. All right, man. Good talking to you. And we'll see you again. And, maybe we should do this next time there's a little a little bump in the market too. I think guys would benefit hearing from you. So thanks for the time, Brad.
Thank you, Tony. Great talking with you.